Hello, it's Robert Miner with Dynamic Traders Group with a brief video for our YouTube followers and Twitter subscribers where we take a look at a couple of markets that might have an upcoming trade opportunity. So we're going to look at two markets today. I'm going to do a follow-up from the video I did a couple weeks ago on bonds, notes, and TLT and emphasize to you how important trade strategies are. Trading is not about forecasting. It's about identifying conditions with a high probability outcome and acceptable capital exposure, and then developing a specific entry strategy, initial stop strategy, trade management strategy, etc. Real good lesson to be learned with bonds or notes or TLT, which was in the video a couple of weeks ago. I'm also going to update you on gold, maybe one of the best opportunities of the year. Not that this coming week necessarily, but possibly in the next couple of weeks. I'll give you the details for that today in this video. Remember, if you like the video, hit the like button. Feel free to send me any comments you have about the video. And check us out at dynamictraders.com if you want to learn more about practical trade strategies. Okay, let's get started. Well, this is the Notes Daily Data, and it's as of Friday 2 weeks ago when I recorded the last video. So you can listen to that video and see what we talked about, but I basically made a case that as of last Friday, this was a bull reversal day. Notes were in a position to have completed a corrective decline, and we're in a position to develop a go-long trade strategy. So I'll just kind of cut to the chase that the trade strategy I recommended was one that I frequently use. And that's once you're in a position to have completed a reversal, is that then a reversal confirmation signal, such as go long in this case on a higher close. So any day that the close is above the prior day's close, you go long in the close. So with that trade strategy in mind, let's add a couple days on the data and see what happened. Again, this is July 28th, the last video. So we're going to add, get over there. There we go. We're going to add a bar. Now the next day, the bonds closed slightly higher, a few ticks higher. So that was the go long strategy with a stop either one tick below the recent low, which is right there, or a close below the recent closing low. That would be the stop placement. And it would be long on the close with a stop at a 110.24 sell stop, or stop close only at just below 111. So really small capital exposure for a potential of a bull trend to above this high. So let's add some data on. Here's the next day. Whoop, we're out. The next day flipped right back around with a close below the low close so far to stop out of that go long trade. Again, trading is not about forecasting. It's identifying conditions with a high probability outcome and acceptable capital exposure, and then developing a specific trade plan, entry, stop, etc. I'll add some more data on here. Well, the next day was even lower, and then 3 days later, the following week, it closed at a new closing low and took out this July 6th low. So bonds and notes, oops, I'm going the wrong way. Bonds and notes are no longer in a position to consider a specific trade strategy because the conditions to complete, in this case, a corrective and weekly low, are no longer in place. In fact, as of this past week, this is data through Friday, August 11th, is that the weekly momentum cycles have all turned bearish. So again, bonds and notes, TLT, they're no longer in a position. So there was a trade with a small capital exposure, got stopped out with a small loss. That's part of trading. Let's take a look at a market that I think is coming up that you might want to be aware of. That's the gold market for a potential long-term, very serious trade. Let's take a look at it. So this is the gold monthly data. Now, if you're interested in gold and if you've been following gold, I'm sure you're aware of this major triple top in the last couple of years. So this is the first top is August 2020, came up almost to test that top in March of 2022, and this is just last May forming a major triple top here. Now, for those of you who've been trading a while, you know that if a market takes out and exceeds a triple top, I mean, everybody in the world is interested in gold, is looking at this. It's going to be major financial news. A lot of people are going to get into the market at new highs because people tend to get in the market near the end of a trend, unfortunately, and not near the beginnings of the trend. And so you really, if you're interested in gold, you really want to be positioned in the event that this continuation of the bull trend occurs. You want to be positioned fairly early on. And that's what we're going to talk about right now in the next few minutes. So the potential that gold is making a correction, and that when the correction is complete, it will then continue the advance to above this triple top. Let's take a look at the weekly data. This is gold weekly data. This is the December contract. And off of the May high, let me just expand this, there we go, is that we've had this decline over the past 14 weeks, and fairly limited decline. It hasn't even reached the 50% retracement yet. But here's the important factors just over the next couple of weeks that you should be aware of. Number one, the weekly momentum cycle is bearish. It's approaching the oversold zone. It's at least warning that more than likely, typically it would be within 2 to 3 weeks, it would complete a weekly low. And so if we can position ourselves, in this case on the long side, when gold's in a position to complete a weekly low, we might get positioned very early in the event that gold does continue to advance to a new high. Now you can see I have a 1 here at this May high. That's not the 1 of the triple top. That's actually the 3rd of the triple top. This has to do with what we call an Elliott Wave count. No time to go over that now, but it's pretty significant. Here's a couple things to be aware of. We have 3 key weekly time factors the week ending August 25th. Now that's 3 key ones in the same week. That's pretty important. That would indicate that in about 2 weeks, gold is likely to complete a weekly low. And that sort of jives with the momentum cycle, being within 2 to 3 weeks, typically at least, of a weekly low. So we've got some momentum cycle, we've got some weekly timing, and then let's look at some price relationships. Not too far below the market is the 50% retracement. And that would typically be the minimum target to complete a correction. So more than likely, again, gold has a little bit ways to go on the downside before it completes a weekly low, if gold is making a correction. And the maximum downside, again, if gold is making a correction, should be around 1884 to 1870. Now that's the 62% retracement. Happens to overlap with this low, which, by the way, is a wave 4 low of smaller degree. There we go. I don't have those on this particular chart, but I know if you're an Elliott Wave person, then you'll know that a typical correction to a 5-wave impulse trend ends around the extreme of a wave 4. Boy, isn't that convenient in that 62% retracement. It's also 1884 is 162% external retracement of this advance. That's a real typical target for the final section of a higher time frame trend, in this case, a corrective decline. So this is really putting us in a high probability position, and I'll say within the next 3 weeks, ideally the week ending August 25th. There's other time factors that indicate the maximum should be the next week. That's the week ending September 1st to complete this corrective decline, no further down, lower than about 1870, and it's probably not going to reach that far down. But what a great opportunity to position on the long side. Now, maybe gold's not going to continue to a new high above that May high. That could be, but still, it would be in a position, more than likely in 2 or 3 weeks, for a weekly low. And those are kind of trends I like to trade, at least. Ideally, weekly trends. So you got 2, 3 weeks or 4 weeks or so to be in the trade, and maybe to be in and out of it, maybe to add a position or two. There's just, if you can identify when a market's in a position to complete a weekly reversal, there's a lot of great opportunities. And as you've seen with that major triple top on the monthly data, this could be even better opportunity than typical on the upside. I'm not forecasting that's going to happen. What I'm doing is looking to identify a high probability trade setup that'll put me in the market with minimum capital exposure in the event that gold does indeed continue to the upside and break out of that triple top. So if you want to keep up to date on this in the next 2 to 3 weeks, because that's where all my focus is for our subscribers, check out our DT reports at dynamictraders.com. And if you want to learn how to trade, I got a trading course that's pretty fantastic. Well, that's it for today, my friends. Thanks for checking out these videos. I'll be back with you in a week or two with another video update. If you like what you learn here, check us out at dynamictraders.com. Get on our traders news list, no cost whatsoever, where we have additional updates at no charge. And if you really want to learn how to trade, check out our Dynamic Trading Master Course, a streaming course, almost 30 hours of education, professionally produced with accelerated learning techniques. You're really going to learn something if you check that course out. Go to dynamictraders.com and learn more. That's it for today. Robert Miner, over and out for now.